Hello, I'm Patrick Linnell with the CattleFax Closing Bell. This episode of the Closing Bell is sponsored by Prime Pursuits. Powered by a dynamic new partnership between 44 Farms and Walmart, the world's largest retailer, Prime Pursuits is designed to respond to growing consumer demand for quality Angus beef. Learn more today at primepursuits.com to see how we can grow stronger together. With record large hog slaughter and pork production on one hand, and hot and cold global trade dynamics on the other, hog and pork markets have been riding a roller coaster of emotion this winter and spring. When news of extreme hog losses and culling in China due to African Swine Fever was released in March, lean hog futures surged 30% higher, with some summer contracts trading above $100 per hundredweight. Similarly, hog prices and the pork cutout also rallied as the news broke the overwhelming bearishness of the focus on record large supplies and ongoing trade disputes with China and Mexico. As a result, the CME Lean Hog Index added nearly $20 in a month, hitting the upper 70s in early April. The rally was too fast too soon, however, compared to actual demand. Belly prices led the initial rally to the pork cutout, but then staged a 27% correction in 2 weeks. Lean hog futures have also pulled back. Although several large pork purchases were reported, market participants quickly realized Chinese demand for U.S. pork would not be a major factor immediately. In fact, sources indicate that Chinese pork supplies are currently more than adequate as intense culling has driven large production. Hog prices in China have held mostly flat since late March as a result. Once those supplies are cleaned up, Chinese meat import demand will be felt across global protein markets. CattleFax currently expects that stronger pork export demand will be realized in the fourth quarter of 2019, but the recent deterioration of trade talks with China creates additional uncertainty. Regardless of trade, expect pork production to continue to expand in the next 6 to 18 months. Positive packer and producer margins, as well as hedging opportunities in the ASF-induced futures rally, will favor continued expansion in the hog and pork industry. While ASF and the resulting exports, along with finalization of the USMCA, will be positive to the market, if this does not materialize, hog prices could again feel the pressure of increased supplies. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real. The volatility is extreme. The risks are big, but the opportunities for success are there. So how do you sort through it all to decide which way to go? For more than 50 years, CattleFax has led the way. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective. Our vision is global. Our focus is you. We provide a direct line of contact with you, our client, to the CattleFax team with our daily updated website, modernized mobile app, or the traditional phone conversation. CattleFax, the deciding factor. Become a member at CattleFax.com.